everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of Daily Stock, we are going to consider the major financial player, American Express. This is a card issuer of mainly the credit cards, which are kind of premium products offering, and we have seen the Amex doing superbly in these challenging times with the earnings higher than expectation, and on back of these results we will be looking at the fine print and what we can expect moving forward. So, with the help of third quarter results of the American Express, we will try to gauge the sentiments and the prospects for the fourth quarter. So let us consider the quarterly earnings in detail. There is the Q3 results provided by the American Express, and it has posted quite fabulous result with these earnings rising 13% on year basis, and the EPS is now at the record of US dollar 3.3 with the rise of 34% in the year-on-year terms. And here we have these breakup and comparative numbers for the third quarter of 2023 and third quarter of 2022. This is the growth figure of rise in total network volumes of 7%, and the total revenues net of interest expense have risen 13%. The net income attributable attributable to the shareholders is also up 30%. So the company has been able to raise its revenues and reduce its expenses. So that has resulted in the expansion of margin with higher net income along with higher revenues for the company. And these are the numbers for 9 month ended September 30th. We will not really go into the details of that. Now let us try to highlight some of the key takeaways from these quarterly earnings. The tax rate is down this year, so this has helped company reduce its outflow. As per the statements from these quarterly results, we can draw the inference that Amex, being a premium card issuer, it hasn't really suffered the deterioration of the credit profile, with most of its customers sticking to the prior timelines of the payment, and there has not been any significant delay even when the economic situation has become increasingly challenging for the majority of the population around the world. But Amex, with its affluent client base, is not affected to that extent, and it is also expecting the coming quarters to have similar earnings potential. Let us look at these segmental results. The international card services, there is growth in this segment as well, along with the global merchant and network services. The corporate and other is one segment where there is loss because in almost all other segments the company is able to generate significant amount of profit. Now we look at the highlights. So these are the numbers for the third quarter, that is September 30th, 2023. And if we do this comparative analysis, we see this growth of 13%. And here, there is a key number of net income with this growth again higher than the revenue growth, and that is because the expenses are lower for this quarter, and the tax rate has also been lower. There are a couple of factors which has helped the American Express EPS to rise to a record high of US dollar 3.3. These are the turnover figures for the Amex cards. We will not go into the details of these. These are the numbers for different verticals, and you can easily access this simply by going to the American Express page and looking for the investors relation. So I will not really read all this file. Rather, I would suggest that whenever you have time and if you feel you need uh, additional details or explanation on any particular point, you can simply download this file and read through and try to understand what is happening for the American Express. Now there is a stabilization in net card fees and new cards acquired. Alright, so here we are, almost done with these reports. This is the customer base for the American Express. Now let us see what is happening on the technical side, and from the title itself you can make a guess that the share price is substantially lower than where it was trading just prior to the release of this quarterly number. So this has been a downhill journey for the American Express in today's session, and this is not really likely to change anytime soon as we have the resumption of downward momentum after due consolidation. So I feel at least for next couple of days the momentum is clearly bearish, and it will be better for us to keep looking for short selling opportunities even in the current scenario where there has been this lower low and lower high formation in place. Now the risk reward ratio doesn't really look that promising, so I would simply suggest that wait it out, allow some consolidation, retracement, and when things look good with optimum risk reward ratio, we can go for the initiation of the short sell trade. So the takeaway is that the momentum is negative even after substantially substantial profit growth and revenue growth, but that hasn't really helped the American Express shareholder who might have been expecting the share price to rally. Rather than rallying, it is declining, and now after this decline of around 4 to 5 percentage point, we can't really rule out a new consolidation, and as and when after new consolidation we see the possibility of resumption of downward momentum, we can indeed take our chances. Here the formation is of lower low and lower high. So from the short-term perspective, the momentum is clearly favorable to the bearish trade, and I would suggest to not really allow any kind of buying trade at the current juncture. The daily time frame is not looking much different here. Also, the momentum is bearish, and as long as we have these immediate swing high in place, we will have to adopt a cautious approach and keep looking for short selling opportunities. But if and only if the immediate swing high is not breached whenever the reversal starts and the price falls little below the immediate swing high and consolidate first. So these are the requirement from the daily time frame as well. The weekly time frame is telling us one thing, that this spurt, this rise which lasted almost close to 2 years, is now over, and here onwards we will have to trade cautiously, adopting a consolidation approach with risk reward ratio also optimally placed. We can indeed take our chances and try to profit from these, pardon me, try to profit from these increased volatility after the release of quarterly earnings from the American Express. So for the next stage, we have the momentum building up for us to help us in continuation of this downward spiral. But given the essentiality of risk and reward ratio being favorable to us, I would suggest that allow consolidation, and after due consolidation we can indeed take our chances as and when the momentum again turns bearish and the American Express share price starts to tank again. We have the possibility of the share price declining towards 130, which is going to be slightly lower than prior swing low. But if we have the emerging opportunities there, we can indeed think on it as well. So that's all from my side for today's session. If any of you have any query or any idea to share, do write to me in feedback, and I will be more than happy to take the discussion forward. See you next time around with a equally interesting stock to work with, and we will be looking at emerging trading opportunities attached to that particular share. So do come back on Monday. See you next time around. Thank you all for joining in. Good.